Hi, I'm Madam Siti from KMK. This is Chapter 10, Standard Costing and Variance Analysis, Part 2. Before we go further in discussing on this chapter, have a look at the conversations among these three managers about production achievement in their company. The company did not achieve the targeted volume of production. The actual production is lower than the budgeted production. The purchasing manager seems does not want to be blamed on because he already purchased enough materials as required. The production manager gives two reasons. It is caused by the different materials used and the shortage of labor. Therefore, the management team must check and investigate what actually happened in the production. One of the solutions is to perform variance analysis. Now, what is variance? Variance means a difference. We are looking for the difference between total actual cost and total standard cost of production, which includes direct materials cost, direct labor cost, variable manufacturing overhead cost, and fixed manufacturing overhead cost. You will learn the cost variances, which consist of direct materials variance, direct labor variance, variable overhead variance, and fixed overhead variance. In this video, we are focusing on direct materials variance. What is direct materials variance? It is the difference between the amount actually paid for the materials and the standard amount that should have been paid. There are two direct materials variance, price variance and usage or quantity variance. Price variance. Price variance is the difference between the direct materials cost actually purchased and the direct materials cost that should have been purchased. Now, I want to show you how to calculate the price variance step by step. Like I said just now, price variance is the difference between direct material cost actually purchased and the direct material cost that should have been purchased. It is AP times AQ purchase minus SP times AQ purchase. AP is actual price of the materials and AQ purchase is the actual quantity of the materials purchased. SP is the standard price of the material. You may factorize the formula like this. AQ bracket AP minus SP. If AP is more than SP, you will get unfavorable variance, which is not good. But if AP is less than SP, you will get favorable variance, which is good. Let's answer this question. The standard cost information is in the table at the top. Below that are all the actual results from the production activity. 6 kg is standard quantity per unit. RM 0.8 is standard price per kg. RM 4.8 is SPSQ per U, standard cost of materials per unit. And 2,500 units is the actual output produced. 18,000 kg is actual quantity of materials purchased. RM 0.8 is actual price per kg. And 14,000 kg is the actual quantity of materials used. Price variance is APAQ purchase minus SPAQ purchase. Apa minus SPA. That is RM 0.8 times 18,000 kg raw materials and RM 0.8 times 18,000 kg of raw materials purchased. The answer is 0, no price variance, because AP is equals to SP, no difference in price. Now it is time to calculate the quantity variance. It is the difference between the standard direct materials cost used and the standard direct materials cost that should be used. Quantity variance is standard direct materials cost used minus standard direct materials cost should be used. That is SP times AQ used minus SP times SQ. SP is standard price, AQ used is actual quantity of materials used. Standard quantity, SQ is standard quantity. If you want to factorize it, it will be SP bracket AQ used minus SQ. If the AQ is more than SQ, you will get variance unfavorable. And if the AQ is less than SQ, you will get quantity variance favorable. Let's calculate the quantity variance based on the same question given to you just now. The formula is SPSQ used minus SPSQ. SP is RM 0.8, AQ used is 14,000 kg and SQ is 15,000 kg. SQ is SQ per U times actual output. 6 times 2,500, that is 15,000 kg. And now you get the quantity variance 800 favorable. Why? Because AQ is less than SQ. How to get total direct materials variance? It is price variance plus quantity variance. Just add together. Price variance is 0 and quantity variance is 800 favorable. The answer is 800 favorable. This is the summary of total direct materials variance, whether it is favorable or unfavorable. Look at the table below. Price variance plus quantity variance is total direct materials variance. If the price variance is favorable and the quantity variance also favorable, then the total variance will be favorable too. And if the price variance and the quantity variance both unfavorable, the total variance will also be unfavorable. But if the price variance is 5 unfavorable and quantity variance is 3 favorable, the total variance will be 2 unfavorable. And if the price variance is 5 favorable and the quantity variance is 3 unfavorable, the total variance will be 2 favorable. I hope you understand. Remember, you can use this diagram to perform your variance analysis too. Okay, there are 3 points on the left, in the middle, and on your right. APA, SPA, SP, SQ. APA minus SPA is price variance. SPA minus SPSQ is quantity variance. Price variance plus quantity variance is, of course, total direct materials variance. APA, SPA, SPA, SPSQ. There are 2 SPAs there in the middle, SPA purchase and SPA use. Because quantity purchase is not the same with quantity used. You can use this diagram in the exam. Yes, that's right. Thank you for watching.